back to the show. Today we're diving into what's been happening in the markets. And trust me, it's been wild. We've seen a sharp drop recently, and everyone's asking, what just happened? So, I've invited someone who lives and breathes the charts, a trader with over 10 years of experience and an intense focus over the last 3, studying markets not just for an hour or 2 a day, but 10 to 15 hours daily. Hani, welcome to the show.
Hey, thanks for having me. Excited to share what I've been seeing.
Let's get right into it. The market has dropped pretty hard recently. Some are saying it's all because of Trump's new tariff proposals. But do you think that's the full story?
Not at all. Honestly, this correction was inevitable. I've been expecting it for almost a year. The signs were everywhere. One of the biggest red flags, the PE ratio of the S&P 500, it had shot way above historical averages. When investors are willing to pay that much for earnings, it's a clear sign of overvaluation, of hype overtaking fundamentals.
So you're saying this wasn't about one person or one policy, but something deeper?
Exactly. The indexes, S&P 500, Nasdaq, NDX, they were all giving out these massive and sustainable annual returns. The market was simply too hot. Now here's the thing. In my experience, every technical move needs a fundamental catalyst. It doesn't matter who the president is. We were due for a correction, and we just got one.
But wasn't this drop kind of fast? I mean, people were expecting a drawn-out bear market, maybe something like 2008, but this was quick.
Right? That's what surprised me too. I thought this could turn into something much worse, maybe the harshest since 2008. But no, the market pulled a crypto-style correction. It dropped hard in just a few daily candles, and now it's already trying to stabilize. It's like a high-speed surgery, sharp, painful, but efficient.
So is that a good sign? Or should we still be worried?
Honestly, I think it's a very good sign. This kind of quick flush clears out the excess without dragging the market into a long depression. It shows resilience. And more than that, it shows how modern financial systems can respond with speed and flexibility when needed.
There's another layer to this, though. Something you mentioned to me earlier, the behind-the-scenes power dynamics, especially between Elon Musk and George Soros. Can you talk about that?
Yeah, this part's really interesting. These two figures represent two different visions for the future of America's economy. They clash on a lot of fronts, but here's the catch. Both of them care deeply about America first. That shared value might help them align. Maybe not completely, but enough to avoid chaos. If they can act with maturity and not turn this into a power struggle, I think this whole economic reset can go surprisingly well.
That's a fascinating take. Now let's zoom out. Looking ahead, what do you see in the bigger picture?
Honestly, I think we're heading toward a technological singularity. AI, quantum computing, biotech, it's all accelerating like never before. But before we get there, the economy needs to realign. This correction is part of that realignment. It's like the deep breath before a massive leap.
That's powerful. Final thoughts. What would you tell someone looking at all this and wondering what's next?
No analysis is ever 100% certain. But even in a world of probabilities, we have to choose our lens. And from where I'm standing, the future looks bright, as long as we're not afraid of the corrections that get us there.
Beautifully said. Hani, thank you so much for being here today. That was incredible insight.
Thanks again. Always a pleasure.
If you enjoyed this episode, make sure to follow, rate, and share it with someone who needs to hear this. Until next time, stay sharp, stay informed.